Hi everyone, it's Alex Sparks here from Sparks Finance and I'm your local mortgage broker in Bathurst. Today's video is, should you get an offset account? Now, for those who don't know, an offset account is a product that's attached to a home loan. So it's basically like a transaction account. Now, any money that's sitting in that account can offset the loan balance, and therefore you pay a lower amount of interest and therefore pay the loan off sooner. So for example, if you had a loan of $500,000 and then you had an offset account with $50,000 in it, instead of having the interest payable on $500,000, your interest will be payable on $450,000. So an offset account is a really useful tool that people can use to make sure that, as I said, you're reducing the interest and paying that loan off sooner. Now the thing is, offsets are a really big buzzword. People have, very, very strong opinions that everyone should have them. But look, depending on your current situation, that might not be the case. And it may actually cost you more money than by not having one at all and just using a basic redraw, which is attached to the loan. Should you get one, it really depends. Okay, so what we're going to do in this video is just run through a few different things just to make sure that you guys are aware of the pros and cons of offset accounts, to make sure that you're making the right financial decisions. Offset accounts are really great. Package fees are really great for marketing for banks. It makes their customers more sticky, which they used to say when we work in the bank. So essentially you pay an annual fee and then you get access to these offset accounts and other discounts on products, credit cards and all that kind of stuff. But it's really important to make sure that the offset account actually makes financial sense. So for example, some lenders actually charge you a higher interest rate by having offset accounts. So for example, if you look at the headline rates of NAB, so their basic variable loan, which doesn't have access to offset accounts, has a current rate of about 6.49%. But their tailored variable loan, which has access to offset accounts, is currently 7.52%. Now, if you were to look at those headline rates and you were to go, great, I want to get an offset account, by having that higher interest rate, you're actually paying $124,513 more over the life of the loan. So it's important to weigh that up and say, well, I want to, if someone wants to go with NAB and I want offset accounts, if we don't get that rate discounted, you're actually going to be paying a hell of a lot more than what you're going to be making from having money sitting in the offset account. So it's really important to make that and understand the finances around it to make sure that, as I said, you are making the best financial decision for you. The next one is to have a look and say, okay, well, obviously the bank will most likely charge a fee. So generally speaking, every bank will charge for their package, will charge about $395 per year. So that's where, once again, it's really important to say, well, am I using these offset accounts the best way I can to maximize that? I would say for a lot of people, they've got access to these packages, but one, they're paying a higher rate, or they're actually not making more than what the actual fee is each year. So once again, structuring your accounts in the right way to make sure you're doing that, you need to have a close eye on the fee to make sure that, once again, you're saving more money than you're paying out for that package loan. The next thing is having all your banking in one spot. Now, with offset accounts, there's no loyalty in banks, right? So some people, bank with Commonwealth Bank, for example, right? But there's a really good loan offer, over at ING, for example. So people go, okay, well, great, I want to go and get a loan over there, I want offset accounts. If they have money sitting there in their savings account with Commonwealth Bank and they don't move that over, the offset account is pretty much useless, okay? So it's really important to make sure that if you're going to maximize them the best way you can, is to get majority of your savings accounts or wherever the most amount of that money is sitting, and move that over to the bank where your home loan is. If you don't do that, as I said, the money is not being used the best way it possibly can, okay? So they're just a couple of things to consider, making sure that you've got those structured the right way. Now, offset accounts work really, really well if you've got them, as I said, if all your banking is in one place, your interest, you're not paying over on your interest rate, and the fee is very manageable. You will have to pay a fee, but making sure that we can sit down and go, great, well, you're going to save a hell of a lot more than what that fee is. Under those parameters, an offset account is really, really good. Now, obviously, it's important from a tax point of view. Now, this isn't tax advice or anything like that, but the money that is sitting in a savings account, if you earn interest on that, the tax office will actually charge you tax on that interest, savings interest that you've made. Whereas if you put on the home loan, instead of making money sitting in a savings transaction account, you're actually saving money on your home loan, which isn't tax deductible, which isn't taxed. So therefore, you're in a really good position, and you're going to put yourself a lot further ahead if you put on the offset account attached to the loan. Now, a lot of people, as I said, come and say, okay, I don't want offset accounts. But to be honest with you, especially around those first home buys and things like that, more often than not, a basic redraw account will be well and truly more beneficial to start with than offset accounts. So a redraw is basically putting that same amount of savings money back on your loan, and then you can access that money. So say, for example, once again, if you had a $500,000 loan and you had $50,000 in savings, you can put that on the loan, still pay interest on that, only on that $450,000, but you can access that $50,000 whenever you would like to, as part of the redraw. So it works in the exact same way as an offset, but essentially you don't have to pay any annual fee. You can use a basic variable loan, which more often than not have lower rates, and put you in a lot better position. As I said, this is what we do with our clients. When they come in, we can sit down with them and say, okay, well, great. Well, this is how your banking is structured. An offset account might be the best option for you. Let's look at those numbers and make sure that's beneficial. Great. If not, we can sit down and go, well, to be honest, the way that you have very minimal savings, so therefore there's no point having an offset right now because your savings isn't at a level where you're going to make, save more than what the actual annual fee is. So therefore we can recommend that to them. So I suppose that's why it's really important to sit down with a qualified mortgage broker to run those numbers for you and make sure that we can structure the right loan accounts for you so you can maximize your loan, reduce your interest and pay the loan off sooner. But if you have any questions around offset or redraw account, simply just let us know. We can sit down, do a home loan review if you've already got one, or if you're looking at getting in, we can sit down, I can answer those questions for you and we can have a look at your scenario and situation to make sure that you're getting the best loan product for you that's going to maximize your funds that are sitting there. But look, thank you very much. Once again, look forward to helping you guys around this topic. It is very commonly asked question, the difference between offset and redraw account and which one's the right way to go. But as I said, if you speak to a qualified mortgage broker, we'll point you in the right direction and make sure we're setting you up for the long term. Thank you.